Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to our loyal and faithful listeners. Thank you for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from our Wilson Investment Properties headquarters in Silicon Valley. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch your podcast on TomWilsonProperties.com or on iTunes or on YouTube. You can also go to TomWilsonProperties.com, sign up for our newsletter on real estate and economics. It comes out weekly. Also, by so doing, you then become a part of our client relationship, client base, so that as Wilson Investment Properties, who is the sponsor of this education venue, is offering new syndications for commercial and multifamily properties, you can then have access. Most of the ones we launch are only accessible by those who are signed up with us. And for $50,000 a share, you can be a part of a large commercial or multifamily property that normally only large institutional investors can be a part of. So we enjoy providing those opportunities to our clients and to our listeners who want to sign up. And also we have a education club and a venue forum called BACOM, BACOMM. You can go to bacom.club and find out when the next meetings are. They are monthly. They're generally the last Thursday of a month. And we've had wonderful guests on board, like Chief Economist of Fannie Mae, Dr. Doug Duncan, and many others. And it's free, and it's for education and for developing relationships and networking. So I encourage you to do that. Today, we have with us Vinney Chopra. Vinney is a multifam investor, syndicator, educator, podcaster, and motivational speaker. He came from India about 40 years ago. It's a wonderful, if we can apply the word Cinderella to a guy, story, and which he'll tell us about in a moment. And he's got his bachelor's in mechanical engineering. What a shock. Another techie turned real estate investor. And he got his MBA from George Washington University. Nicknamed Mr. Smiles, he is a motivational speaker and educator for over 3 decades. And Vinney, how nice to have you on the program.
Thank you, Tom. It's a pleasure to be here, living in the Bay Area in Danville. It's a pleasure to be in the show, which is, right there headquartered in Silicon Valley.
Boy, what a... So have you been in the Bay in Northern Cal for 40, or have you were in other parts of the country?
38 years. We've been married 38 years, my wife, and we have 2 very beautiful children. We were in the back east when I grew up, when I came to the USA, Washington, D.C., then in Ohio. And that's when my company moved me here. They said, Vinney, would you like to open the West Coast division? And that's what we did.
Wow. Aren't crossroads that affect one's journeys fascinating? I'd love to hear about people's crossroads. So Vinney, tell us a little bit about, I think it's known in your circles that you arrived in this country with $7 in your pockets, and
right.
in your pocket, and here you are, a successful real estate investor. Give us, how did that happen?
I was just thinking about it. It's been many moons ago, of course, when I was a young man and came with $7. That's how much anybody could bring at that time. I got accepted by the university. My uncle lived in Gaithersburg, Maryland, and he sponsored me to come here because you couldn't come otherwise. And then I remember him saying, Vinney, Vinney, my nickname is Vinney, and real name is Vinod, Vinod. And he says, I'll pay for the tuition, first tuition. And he did, and come to realize he didn't know when the next one will come. That's when I went and sold Bible books and encyclopedias and everything, door-to-door knocking for quite a bit of time, and that's what happened.
What valuable training that is for anybody, right? To take the risk of rejection.
Yep.
And to, good for you. So when you came to Silicon Valley, so tell us a story about how you went from
we
traditional job to real estate investing.
Yeah, I introduced to single-family homes. Our friend circle in the Bay Area, East Bay Area, where we live in Danville. A lot of people, started talking about, real estate and how to invest and things like that. That's when we started buying, single-family homes, quite a few homes, as much as we could. And then I became a broker in 2004. That's about 14 years back I said, okay, what are other places I wanted to go commercial? And I did look into almost every facet of commercial real estate, but multifamily caught my attention, and rest is history in my life and our lifestyle.
So you started with houses, and then how'd you evolve from houses to multifam?
Again, it was my thinking was, as an engineer, I am always logically thinking how to scale it up. I know our single-family homes were all right. They were in Arizona, in Georgia, in Texas, in India, all over the place. And they were managed by property management companies at that time because we couldn't really do ourselves remotely from California. And they were great, they increased in value. I remember the first one we bought in Modesto. Couldn't believe it, $61,500. It increased in value to $315,000, if I remember. And we pulled out $290,000 or $280,000 out of that property by refinancing it. And that gave us more money to buy more and more. Then Arizona also we did. And so at the end of the day, somehow if there was some problem with a boiler or, a roof or something with the home, it shot the cash flow pretty severely. And the tax ramifications were okay, but the cash flow was not as big as we wanted to, for retirement and things. That's when I started looking into how about if I have 20 homes in one lot or one place, or 100 homes or units in apartment complex, units in one place. Economies of scale will help, and logical mind really gravitated to that. And then also 2007-8 with the downfall and everything, we found that multifamily really did get hurt, but not as much. And the lenders were not giving any money on other things, but multifamily was something they were looking into, being easy on. So that's how it changed. Our first property was 14 units, only 14 units, but then the next one was 109 units and 101 storage units. So that kind of gave us a little taste of good cash flow when we closed on those two in the same week. Actually, it took us 9 months, Tom. It was hard work, And we did syndication on the second one, 109 units, raised $1.150 million, I think. And what was the other thing? Oh, it was seller financing because we had nothing. We had zero background, zero knowledge. We were not going to move to Texas, all those things, right? Just like I'm sure a lot of people come across that even now remotely. So we just talked the seller to give us a, seller financing.
Using other people's money, huh?
Yeah, there we go, OPM, other people's money. And the good part is to get them happily involved. That's what we have seen in the last 12 years, how many great investors who are doctors, attorneys, CPAs, right here in the Bay Area and across the whole nation, who are our investors and very good friends, clients, who have put in millions of dollars. And the good part is that they are realizing great returns, also at the same time. They are busy in their work, but then they look for somebody, syndicator like me or somebody else, who can be trustworthy, who could be frank and open and transparent, to give them the healthy returns quarterly and so forth. And equity gains, we have sold. I've done 26 syndications so far with my teams of 2 companies, and we have sold 10 of them already, returned the money, initial investments, and given anywhere from 18 to 43% per year. We have given, by the way, returns per year.
Yep.
So
what do you like? What do you like about multifam?
Multifamily, the biggest thing is it's the economies of scale, Tom, and not only that, you can have property manager, lead maintenance person, make-ready person right there, and you can also take the, like the rents, the vacancy does not affect that much in multifamily. If only we have a 100-unit apartment complex, 5 people leave, we still have 95% occupancy as compared to single family. If the resident leaves or tenant leaves, we have 100% vacancy, Of course, the tax ramifications, the depreciation, accelerated depreciation, the bill back system, which is the utilities bill back, the RUB system, lots of different, and it's only one transaction. That's the other part I like. Instead of 100 homes, it's only one complex. So the Fannie Mae, Freddie Mac, or institutions or banks, they love to give you loan, almost 70 to 80%. Majority of our loans are pretty strong, 80%. But once we add value, the LTV goes down to 70, 65, even 50 in certain cases, because we increase the NOI, the net operating income, that increases the value.
And they're non-recourse.
They are not. Well, quite a few are non-recourse, but some of the local banks, they don't give you non-recourse. They give you recourse. But if you have it done very good underwriting, evaluations, and have some very good safety factors, we don't mind doing recourse,
Right. We don't either. I mean, if you're willing to sign on a recourse note, people have asked me, how much have you invested? And we do invest in them, but the main vesting is your skin in the game. When you willing to sign on note, you believe in it enough to do that. We'll be back in a minute with Vinney Chopra, who is a multifam syndicator and a investor, techie by background, so he knows how to analyze things, and he's sharing with us what he's learned over his years of investing. So stay with us, and we'll have Vinney right back in just a moment.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We have, fortunately, with us today, Vinney Chopra, who is another techie turned real estate investing, who's a multifam investor, syndicator, educator, and motivational speaker. So Vinney, you talked about how you like multifam investing because the economy is a scale, and you can certainly you got one roof or set of roofs, and you've got a one loan and so forth. However, it's not just something that falls in your lap. What would you tell us is some of the most critical components that can make a multifam successful or not? In my personal portfolio, I tell people the highest return product I ever had was a multifam property, and the lowest return property I ever had was a multifam property. So it's all those are years ago, and I've learned a few things about since then that helped me make more of them successful. But there's some things that have to be done correctly. Talk to us about that.
Totally, Tom. I know when I started crunching numbers way back in 2006, 7, 8 even, in the Bay Area, the numbers just did not work in the extensive underwriting that we do. That's when we moved. We looked at, okay, where is the best place with employment is the highest. We have always stayed with jobs in my two companies, acquisition companies and two management companies. So we went to Odessa, Texas, out of anywhere else. A lot of people back then, I don't know if they knew, Midland, Odessa, that's where the employment rate was the highest. Unemployment was 3.24%. The lowest in the nation. So we arrived there, and that's when we started buying, product in 2008, 9. We bought like 7, I think, over there. Then we moved to, again, jobs near Austin. That has been, again, in Texas, huge market. The Red Rock, the San Marcos, again, San Antonio. We arrived in San Antonio, I think, 2010, and bought 7 over there. We always try to buy cluster of complexes like a C in an A neighborhood or B in an A neighborhood. We would go and talk to the brokers there, start building relationships and everything. But ask them, what are the draws of the jobs and how they're going to perform in the next 5 to 10 years. So emerging market has been our mantra. And in the last 4 years or so, let's say, with my new company, which we started, Monil Investment Group, our kids named Monica and Neil together. That's how we formed the company. We went to Houston. So south of Houston, we found billions of dollars will be spent there, and the jobs were coming. So we bought their product, 10 of them, not just 1 or 2. I went to brokers and I said, we'll buy 4 for sure, but we ended up buying 10. And now we are in Atlanta where jobs are again. There are a lot of emerging markets, yeah.
And what, we love Texas. I've done most of my investments outside of California have been in Texas. A lot of people don't realize what an economic powerhouse they are. That one third of all new jobs created in the United States and since the crash have been in Texas. it's a staggering,
so true.
Staggering stat. And what can you tell listeners about in general what you think's strong about Texas? Why is that so good for investing?
Again, if we look at Houston, it's not that much oil dependent anymore, Tom, and medical is very big there. Education is very big there. Of course, NASA, if we find some more funding, that's going to open up. Then, of course, the power plants, the ports are huge. Look at Dallas. Pardon? Mm-hmm.
Okay, go ahead.
No. And then, Dallas area, of course, it's overheated, but Fort Worth, Texas, right next to Dallas, still there are great opportunities there. Then San Antonio is coming back. It has been strong always with the insurance, with media center, with medical center there also. And I just read some great news that San Antonio is coming back with a big job growth. So those are the 3 big hubs in Texas, which are amazing. I have always tried to stay very close to the MSAs, metropolitan areas, Yeah.
Yep, I tend to like that too. We always like broad-based economies, pro-business economies, and I just don't like one-horse towns. I like them big enough to have a breadth of employment.
Right.
So we'll be right back with Vinney to discuss some more about how you select a property and market and how you select a syndicator. So stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We're talking to Vinney Chopra today about his experience with real estate investing, how he migrated from houses to multifam, what he likes about multifam, and one of his most popular places to invest is Texas, which has been ours too, and not because either of us have lived there or have our uncle there or anything else. It just the numbers make sense. So from a techie perspective, from which Vinney comes from, as well as myself, when you run the numbers and the job growth is just compelling. The fact that there's no state tax, that there's broad-based economy, they're just very pro-business, and I think and it's affordable housing. So you put all those together, and most any place you go in Texas and to many places in the Sun Belt, which is our favorite. We like development in California, and why? Because it's so difficult to get permits that if you can navigate through that, you get a lot of value add. But boy, that's a tough way to for us to make the money. But you mentioned about Atlanta there, Vinney. What do you like about Atlanta?
I sure do. I've been looking at Atlanta for about 2 years now. I took a trip there in 2016, Tom, and more studies I looked at. It was amazing how Atlanta has come now, if not number one, number two movie maker in the world. So Hollywood is here in California, but they have built studios after studios there near Atlanta, south side of Atlanta, which I love. And also the tech, lots of tech jobs have come now to Atlanta. It's affordable. It's the airport is biggest in the world, I think, too. Hartsfield Airport.
Yep, busiest airport in the world. Yep.
Yeah, busiest, exactly.
And it's become pretty broad-based economy, as you're indicating, hasn't it?
It sure is. It sure is. So those factors really, really capture my mind. And, of course, then I bought just now $23 million worth there. And I just took a trip a couple of weeks back. And my broker said, Vinney, in 11 months, you could sell this 191-unit property for $2.5 million more. $2.5 million in 11 months. And I paid only $12 million
10%
for it.
For a multifam that's not driven by the emotion of an owner-occupant, but driven by income, right?
Yes. Well, and we have
amazing.
not done much at all. We haven't increased the income. I'm looking at loss to lease is pretty appreciable. I told the broker, oh, no, we're not going to sell yet. We're going to sell.
And what class
4 years.
what class of property is it?
B. It's a B class, B class in a D area, and it's in a growing area where lots of jobs are coming, Yeah.
B is my favorite, right? You
sure.
You capture folks moving up in a boom, and you capture folks in a recession that are moving down from an A. So it's
that's
I
so
like that.
true, so true. I love that. That B minus area is a really great area to be investing in a B or B plus or A neighborhood. This way you are kind of catching very nice asset there.
Yeah, what I find is, and I'm sure you, like ourselves, even though we have a lot of experience, will never get involved in something in which we don't bring on the team someone who's an expert in that particular area, whether it be asset class or in that particular market. That's so critical. Vinney, we got a break here for just a moment, and we'll be right back and continue the discussion. So stay with us here with Vinney Chopra, who is a multifam investor, syndicator, educator, and stay with us. We got a lot more questions for Vinney.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Well, we've got Vinney Chopra on the program with us today, talking about the multifam. He loves Texas, and he's now doing getting a little bit more business involved in Atlanta. We've talked about how Atlanta is a wonderful metro because it's a primary city. It's the busiest airport in the world. It's a broad-based economy. But let's talk about how our listeners who are interested in investing something like this can select a syndicator, and what does a syndicator do that brings value to the investor. Can you chat about that a little bit, Vinney?
Oh, sure, Tom. Syndicator like me and other great syndicators, it's a long process. We have to establish relationships with, of course, the investors part first to get the investors, vet them out, and then the brokers who we try to get pocket listings. I say actually napkin listings in my book coming up. What it is that a lot of brokers send the same property to you. So they don't have a listing yet, but they have it on a napkin. The seller is trying to find out who they want to go with. So it takes lots of calculations and finding out several deals, and then you look at, underwriting them, and then you go put LOIs and go through the whole process of their questioning your finances and, the proof of funds and all that. But it takes many months. I mean, just for example, it took me almost a year of work to get the 2 properties in Atlanta. So it's not that easy. And then once we get the properties, like LOI accepted, then it's the contract, it's the loan qualification, it's the due diligence of 30 days, it's the phase 1 reports, it's lots of things go into it. And then, of course, you're working with the loan broker. Then you are getting ready to take over the asset if everything is going fine. And not only that, we have to work with the syndication attorneys, pay them the fees, and get them to produce the PPM, the private placement memorandums, and subscription agreement, and get all the investors to fill out the legal paperwork correctly and everything, and then wiring the money or sending the checks into the LLC of the, investment. And then we now get ready for taking over the property if we want to get an outside third party. In our case, we have been managing all our 26 assets, so we get involved in interviewing about a month before the takeover. And then once we take over, it's again huge process of transferring all the utilities, taking over contracts, getting the softwares going, and then we manage the asset for 3 to 5 years. So as a syndicator, it's a long, drawn-out process. Once we sell the property, dispose it off, we give the money back to the investors, initial money. Of course, they get quarterly returns from our company during the every quarter on the quarter for the time we keep the property, but then we dispose it off, and then the investors can take 1031 into something else or reinvest with us again. So it's a very long process.
Maybe we should clarify that anyone can buy a property. It's not as difficult. It's extremely difficult to buy an outstanding property that gives your investors the best returns. Would you agree?
That is huge, Tom. You're so right, so right. All these things, the education and learning, like your experience and my team's experience, it's a big operation you have to run, but you got to have the golden nugget. You cannot buy any property because we are putting next 5 to 7 years projections into our underwritings, and we want to make sure we deliver on them.
Actually, even a product that's not that good a product or return takes a tremendous amount of work, right? So,
you said it correct. There is a lot of heavy lifting. We are heavy lifting now, actually. Right there, I bought like a C product and a B product in Atlanta. It's taking a lot of time. I just spent 2 weeks there constantly, working with their teams, our senior managers, lead maintenance and all, because we are doing a lot of renovations. Like you said, value add, that takes a lot of heavy lifting. Yeah.
Yeah, but it's very, very rewarding, not only for ourselves, and of course, upon exit is when the sponsors get most of our returns. So,
Yes.
I think our investors deserve that. And I think it's good for us to keep us engaged and to maximize our incentive to make that product perform as great as possible. I remember one of our earlier syndications that we did, we had a couple of our clients who were really questioning our exit fees and our exit percent cut of the profit. And so we were concerned, maybe they think we've got taking too much of it. And in the end, they said, no, we want to make sure that you get enough at the end so that you'll make darn sure this product performs, right?
Totally.
Yeah, that's so true. And to find a good product, it really takes a lot of existing quality, long relationships, doesn't it, in order for us to get enough deal flow from our
It really does. It really
sources.
does, Tom. We don't get the same things, given to all the investors or syndicators. They have to be in their good books to get them.
Yep. And once they learn that you're a closer, that you're high integrity and ethics and so forth, of course they want to do business with us again, right?
Yes, as performers, like we call it.
Yeah, very. So it's wonderful building up these relationships that then result in success for our investors and ourselves. So we're going to come back with Vinney here in just a moment and have a little summary wrap up, and we'll let you know how you can learn about his syndication academy. So stay with us, and Vinney Chopra here on Real Estate Radio Power Investing. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
What a treat it's been to have Vinney Chopra on today, a longtime investor and syndicator, and another engineer who has used his analytical abilities to figure out that real estate investing can be good, and it can be great if you really do your due diligence and watch the numbers very, very carefully. Vinney, what do you have some summary thoughts about values in investing in multifam and the values that a syndicator adds to a deal? Can you anything you'd like to summarize for us?
Love to, Tom. It's been a pleasure to be on your show. Being in the Bay Area, local, right here in Danville, it's been a pleasure to meet you. And definitely, I would say that majority of our audience, they have good amount of money in their retirement plans and savings in stock market or whatever. But it's a great avenue to invest in real estate. That's the one place where the banks give us 80% of the loan. For stocks, they don't give us any money to buy stocks. So I believe in that logic, the real estate, and especially multifamily, is the way to go because that has economies of scale. It's got, so many different units under one roof, like we discussed, all that. If people can do it themselves by getting a 5-plex or 10-plex or 20-plex, but if they would like to get bigger units and get passive income coming in, but they do get the depreciation effect and the whole tax ramification, they should invest with you and I and other good syndicators,
Yep. No, continue.
Yeah, and, like we are doing $50 million fund. I know you're doing a fund. Ours is a 506C, which we can advertise, and it's MonneilMultifamilyFund.com. If any of your, investors would like to look into that, that's our $50 million fund. We are raising them like 10 million. This way we could get some good product, good properties. I know the market is hot. So it's good to have accumulation of the equity upfront so that we can make some good deals,
Good. And you've got a syndication academy, right, where you teach about investing.
Yes, lots of when I got on 36 podcasts or something like that, a lot of people started to call me. I would give my cell number. I still do, by the way. People can text me.
We just got a few seconds. Vinney, we just got a few seconds left. So how do they find out about Syndication Academy?
Surely. All they can do is just text the word syndication to 474747. And my team or I will get back to them, and we can give them lots of free things and educational brochures and things like that.
All right.
They might
Vinney, thank you. Vinney, thank you so much for being on the program. I'm sorry to cut you a little short here. We got to wrap up. And thanks for being on. You shared a lot of interesting things. Remember to go to TomWilsonProperties.com. You can sign up for our weekly newsletter. Also get access to our deals that come up. And also remember BACOM, BACOMM.club for our monthly education venue that you're welcome to attend here in South Bay. We also have the videos from it. So thanks for being with us, Vinney. And remember, the only thing that matters is what you do next.